I'm Diego Sanchez, president of HousingWire, and this is 10-Minute Talks. My guest today is Jay Promisco, president of Sierra Pacific Mortgage. Jay, welcome to 10-Minute Talks.
Thanks, Diego. It's a pleasure to be on with you. And by the way, congratulations to you on your new role and everything that HousingWire. Clearly, they have a really good feel for talent over there to put you in that role. So congratulations.
I really appreciate that. I was going to save this for a little bit later, but congratulations to you. You just got a recent promotion too.
Yeah, as they say, be careful what you ask for, right? So, but no, I'm thrilled.
You were putting out fires right before our conversation, so I know what you're talking about.
Yeah, thrilled for the opportunity though.
Well, before we dive into our conversation, could you give a 60-second introduction of yourself and Sierra Pacific Mortgage?
Sure, 60 seconds or less. I can make it quick. I'm Jay, and I'm a recovering loan officer. Been in the business, a very long time. Prior to getting a mortgage, I was in institutional banking. At my core, I'm a loan officer, and I still some days I wake up, I can't believe I'm at where I'm at, considering I was jocking loans about 10 years ago. The company I work for, Sierra Pacific Mortgage, is probably the longest tenured independent mortgage banker out there. Some things we're proud of. We're one of the few companies that still has the same name on the door as they did in 2008. So really proud of that. Single owner, big servicing book. We focus on one thing and one thing only, and that's customer service, and providing great value to our broker community and to our retail loan officers. And, one of my core tenets at the firm is do the right thing always, even if it's hard. So I love where I work. I love the company. It's been a beacon of hope for the industry for a very long time. Glad to be here.
Yeah, I love that. You joined Sierra Pacific over 6 years ago after 9 years at Stearns. So what attracted you to Sierra Pacific, and why did you make that switch?
Well, that's funny. Because when I was a loan officer, and I actually tried to work for Sierra Pacific, and I didn't make it past the interview phase. And so I kind of did most of my loan officer in the Sacramento area, Northern California, and they were like the big, huge behemoth company. And I was at Stearns for a very long time, starting in 2008 when we didn't have anything, went to number one market share. We sold the company, and it got, got a little uncomfortable. And I'd always wanted to work for this firm. And so I got this opportunity to run retail over there, and I jumped at it and moved back up to Sacramento, and here I am. So it's been a wonderful tenure. What I'm blessed about is I don't move firms. I've got to work for two firms for the last 16 years of my career, and that makes things a lot easier.
Absolutely. Long tenure. You can really fix things and improve things and grow things. So what does this recent promotion mean for your day-to-day?
More day-to-day. Well, the decisions become a lot more important. I get a little bit more broader influence on the entire organization before just like trying to control production and making sure things are happening. And literally the worst 30 months of entire mortgage banking's history has been challenging. So now I've got operations, IT, compliance, production, really just trying to create a path, not so much what the company is going to look like next month, but what the company can look like next year at this time. And we're getting ready to, there is a bull market out there somewhere, whether it's this fall or next year or 26. I don't know when it's going to happen, but we got to be ready to capture and attack that thing when it happens. But while you're doing that, figure out a way to make a couple bucks in this market and keep your employees happy. That's my main role here at the firm.
Yeah, let's talk a little bit about that in the meantime, right? Like we all know housing is cyclical, and there'll be a boom just around the corner at some point. But what are you doing right now with your organization to gain market share or to grow or to keep employees happy or all of the above?
Yeah, I guess the first step is, you can't ever stop growing. You can't ever stop hiring because if you don't grow, you die. It's just natural attrition rate. We've been pretty blessed in the TPO arena. We've had a significant number of people at outside firms wanting to come work for us because they're looking for some stability, and the TPO market's rough. I mean, wholesale and the broker community, there's been a lot of wholesalers that have not made smart financial decisions over the last few years. And so all that share gets repatriated somewhere. And a lot of account executives are looking to us like, simple questions like, will my payroll checks cash? Yeah, they'll do that here. Broad product suite, excellent, phenomenal technology. Thank you, Diego. You awarded us the Tech 100 award, and we're like one of the only 8 lenders, I think, on the list, and we're not that big. So we're really proud of that. So back to the things we're working on is growing share in both channels, both retail and wholesale, methodically with the right people, not to be blunt, writing a bunch of checks and hope they work out. I don't want everybody working at my firm. I want the best people working at my firm. And then focusing on what we can control, right? So I can't control the market. I can't control interest rates, but I can control the broker experience. I can control my process. I can control my manufacturing costs. I can control my technology to provide a better experience. Those are the things that we're focused on for the rest of the year.
So you've mentioned wholesale a couple of times, so I have to ask a question about it. The wholesale channel has seen some departures over the past 18 months. It's been a rough stretch for wholesale in general. How do you make sure that all that market share opportunity doesn't just go to UWM?
Yeah, that's actually they made our job a little easier. And you could people talk trash about UWM and all those things, but they kicked everybody's butt. They really did. And whether the marketing was great or, Ishbia did a great job, I don't know, but they smoked everybody. But there comes a time, back to TPO being a tough channel to be in. You can see some of these companies are public. So you can see that the amount of money they're losing, well, it can't go for perpetuity. At some point, you can be a great company, and if you're losing money, you're going to die. It's just how it works. You can't run a loss forever. So what I am seeing in the channel just recently is a little bit more rational pricing dynamic. Now, there's still some up and comers trying to go out there and grow share through price, and that only lasts for a certain amount of time. But there has been, with competitors that I think have good leadership out there, that are starting to be a little bit more methodical on their pricing mechanisms, not just lowering price 100 basis points and see what happens. That's making it easier to take share. I think a lot of the broker community, got awed with all this technology and just go to one place and not have an account executive. But the problem is the loans we're doing now are so hard. Every loan that we do is hard. Having an in-market account executive that's seasoned, that understands, that can support them, having a customer service model where our brokers and loan officers can actually talk to the underwriter that's working on their file, that's helped us drive some share as well. And then again, hiring the best. So account executives that really know their markets inside and out, know how to sell, and have a good broker base has helped us as well. And I think the broker community, I said this at HousingWire, having just 2 companies doing wholesale makes them not brokers, right? Brokers want options. And, we have our bad days too, just like everybody else, but brokers want options. And the more thriving independent mortgage bankers doing TPO, the better for it.
Amen. So on the stage at HousingWire Annual, you described a system of accountability at Sierra Pacific that involves daily morning meetings with all of your executives and several other daily agenda items. What are you trying to learn in those morning meetings to help set up your day?
Yeah. Everything, Diego, everything. This business moves pretty fast. And for me, if I don't understand my organization top down every single day, small problems can become really big ones for me. Things that are important in this market, and always important for an independent mortgage banker. What's your cash position? What's your warehouse look? What's my edge look like? All the financial mechanics behind it. How's my service level? How is operations doing? What do locks look like? Applications, like which markets are growing, which ones aren't. Taking that holistic view every single day, Diego, allows me to fix problems quickly. So speed to decision-making in this market is critical. And if all you're doing is looking at your business once a month, you can't be fast, right? So in this market, people that can change direction and strategy quicker are going to be more successful over time. So for me, it's just, look, I love details. I'm a numbers guy. I love math. The numbers don't lie to you. So getting that data in front of me every single morning helps me make really good, solid decisions during the course of my day.
The numbers don't lie. We will end it there. Jay, I look forward to seeing you in Scottsdale at the gathering in a month and a half or so. Really great to catch up with you today.
Yeah, thanks, Diego. See ya in Arizona. There's going to be a lot of people there, so it'll be exciting.
It'll be fun.